1 2 1 2.
Good afternoon to all.
Hello, how you doing, guys?
Good.
All right, 1 2 1 2. Can you hear me?
Loud and clear.
That's what I like. Where is that? Good morning, Sergio.
Morning. Pardon.
You look sleepy. All right, how many of you done some analysis on CPI today? Okay. 1 2 1 2. Wakey. Okay, so we have less than an hour for the CPI data print. CPI is the Consumer Price Index, measures the change of prices in a basket of goods and services. And the economic forecast, or the forecast of economists, is set to be decreasing, meaning that the core CPI, which excludes energy and food prices, is set to decrease by 0.1%, a whopping 0.1%, and the leading CPI indicator, which is decreasing from 6% all the way to 5.1%. So is this inflationary or deflationary?
Deflationary.
If it's decreasing, then it's deflationary, right?
Yes.
Excellent answers. That's what I like. Energy, passion, enthusiasm.
Hi Remoy, how are you?
Oh, very well, very.
Nzuri. Hii hearing yetu ya 19th. Unajua me in my mind I knew it was 25th. And my plaintiff has traveled for Umrah.
Okay, so I'm quickly just going to do some admin.
Hi, Thomas.
Hey, Seppi, how are you, darling?
Good, thank you. How's
Long
everything?
time.
Good?
Yeah, I
Yeah,
was on
but,
vacation.
How was your vacation?
Good, great.
Excellent.
Yeah.
So, welcome back, Seppi. If you haven't watched the morning briefing, we are going to have CPI trading today, Consumer Price Index. Very important because it's going to determine the next step or the future of the monetary policy, the next step of the Federal Reserve of the United States. The forecast, which is put forward by many smart people, economists, bankers, etc., is said to be decreasing, which should help to push gold higher. And yet, gold is edging lower and lower all morning. We had a position which I posted. This was a high-risk setup. I did pull out about almost halfway through, or even less, quarter. Let's call it quarter. When I closed down the profit. To be honest, I wasn't expecting that price is going to come down all the way to 2007, which was the initial target, but it did come down, which was good. How many of you sold gold this morning based on my analysis?
I sure did.
Good. Why did you close it? Did you hold it all the way down?
I still have runners open.
Wow, well done. Okay, so CPI data print is 35 minutes away, and the forecast is set to be lower than the previous, which means that if we can believe, or if the economists are right, then gold should rise, because if CPI is lower than expected, I already done the hard work for you, the heavy lifting. I already visualized for you that what's going to happen with gold. If CPI is much lower than expected, then we should see a nice push to the upside. There's a very good Financial Times article which I posted this morning into Discord. I will try to find it, but basically it summarized it very nicely that what is going to happen with gold. Let me just find my notes quickly. So a soft inflation print could send gold prices above $2,030 to mark a fresh year-to-date high. Given the inverted yield curve, talks of soft growth, which is, lower GDP, etc., and recession and the rise of geopolitical tensions in across parts of Asia. So if we have a lower than expected CPI data print, that's going to send gold back to 2020, 2018. Even some economists are saying it's going to be going to 2030. And if you look on the chart, 2030 isn't too far away. It's the last previous high. Jakub, I don't know what you rubbing into your microphone, but it's very loud. But basically, what said the forecast, if the CPI is lower than expected, then we can target 2032, which is going to mark a new year-to-date high. How exciting is that? But if inflation is stubborn, if it doesn't want to come down, well, I have some good news for all the bears and all the sellers, that gold can revisit 1950. Even some really extreme forecasts said that it can revisit 1930. I think it's a bit of a long shot. 1960, 1950 should be the bottom, but it's quite extreme. And what we know so far is that we have the economist forecast, so the professional forecast, which is said to be lower than expected. So most likely the expected scenario is that gold will fly as the CPI print will be lower than expected. And just in case, to give you a full analysis, if something doesn't go as planned, because we know exactly how many times economists can be wrong, if CPI is higher than expected for any reason, gold is going to melt down back to 2000s, even lower. 1977 would be a nice, reasonable target. But we all know that how difficult to trade high impact news, and we all know that if you hold the trades too long, you have the risk of losing your money because price can easily reverse. And also there's one scenario which we haven't discussed. What could be that scenario?
The numbers don't change.
Exactly. Well done, Sergio. If there is no change. Now it's important to differentiate between significant change and just almost the same. If there is no significant change, I already marked for you, and we discussed it in the morning briefing, because we have morning briefing every single day where I talk you through about the coming day, what to look out for, what to watch out for, what to expect, and what is the market sentiment and macroeconomics. Now, if there is no significant change in the numbers today, it's going to be printed on core CPI and CPI, then in my humble opinion, gold is going to continue to the same direction where it started during the NFP data print. I'm just looking for which one was NFP. Yes, this was the non-farm payroll. You can see on the chart on 10th of April, 7th of April, sorry, we had a almost the same, you know, it was in line with expectation. So it's a quite strong labor market data, which pushed down gold 200 or 300 pips. Now, if there is no significant change, then gold is going to react exactly the same way as it did for NFP. Okay, let me just mute. Let me just mute everyone. If you want to unmute yourself, feel free to do so to join the conversation. So what I discussed about is the correlation between or the deduction that we can draw from the NFP data. This was the NFP data right here, 7th of April. There was a Friday, beautiful sell-off. No, because the labor market data was still too strong, it was perceived by the traders and investors as inflationary. And if you have inflation, then the Fed is expected to continue further with the interest rate increases. So if, oh, sorry, no, this is a fact because this was printed. So because the NFP was almost, you know, in line with expectations, so the labor market was still too tight, the immediate reaction was a massive sell-off. I mean, let's stop for a second and measure this candle right here. I hope you can see it. This candle right here was 121 pips. Let me zoom out for you just to see. So during NFP, this candle right here, boom, 121 pips, melted. Of course, it immediately pulled back. Many people, you know, took profit on the short position. But hours later, price could not and did not revisit the starting point at 2007 and melted even further to 200 pips, then slowly came back on the stairs, and then again, boom, down the elevator. So overall, this move, based on the inflationary data on NFP, ladies and gentlemen, 262 pips. Now, who would be happy with 262 pips? Hands up.
I will, thank you.
There you go, Bram. Welcome back, brother. How you doing?
I'm good, right? Good.
Okay, so
Good to be back.
if you look at the previous data, we can start making conclusions about what was the market sentiment. And don't get fooled by this bullish momentum, because if the market, or if the economic indicators print any data which is inflationary, the market is going to sell off. And if there is no significant change, we can translate it or interpret it as you know, still inflationary. And if it's inflationary, then the market is going to sell off. So these were the two positions since yesterday. Only two positions, but it gained very dearly. Who held this position overnight and made some good profit yesterday?
I hold and added some positions in this candle that you show now.
Okay, so
This big
we had
candle.
this. Oh yeah, we had this big move yesterday. That was around the 100 pips. Oh, 222 pips. That is very good, ladies and gentlemen. So we had this big move, and then we had the mini move today, which was you know, counter trend. 100 pips, 96 pips, rounded it up 100 pips. But that was yesterday and the day before. So what is going to happen today? I already made you the visualized scenario analysis that what could happen on the market. And if I just delete these, because this is quite, you know, in the way, what we can see is gold already started moving sideways, because, you know, the market is measuring up the possibilities, the probabilities. What's going to happen? Is CPI going to be higher or lower than expected? Now, I already told you that if the CPI data print is lower than expected, so it's deflationary, then gold is going to the moon. If the CPI number is higher than expected or no significant change, then gold is going to sell off all the way back to 1990 again. Some people say it's even lower, 1970s, but I think it's a bit of a stretch. What we know so far is that it's moving sideways, consolidating. It's a normal reaction of gold. So again, if the CPI data print is higher than expected, then gold is going to sell off. If the CPI data print is lower than expected, gold is going to the moon. And if there's no change, you can see that it will be the same effect as if CPI was higher than expected. Can we expect some dirty moves today on gold?
Of course.
Always in it.
Yeah,
In it,
always.
fam. Okay, so the dirty move could be on gold if it spikes down to the pivot to revisit 2000s. It's a very strong psychological number. So be ready that, you know, we could have a continuation just to scoop up some liquidity from 2000 and then continue higher. So for this reason, I am quite reluctant to enter into any buy positions yet, because what I'm expecting is something like this. Is price to come down to the pivot and then move higher if it lines up. If the CPI data print lines up with the economist forecast. That's the dirty move that I'm expecting today. Sell the news and buy the fact, or buy the news and sell the fact. Of course, unless we have the data print, we cannot be sure what is it going to be. So in my opinion, if you haven't had, if you don't have any open positions, you have two options. You're either going to risk it and go with the economist forecast, which is set to be, or expected to be lower than expected, so inflation decreasing, so gold should go higher. Or, if you think that inflation is going to be stubborn and there's no change, you can sell from the current position. You can use this box, this consolidation, as a stop loss. So if you go with the economist forecast, you can just place a stop loss, you know, below the bottom, below the floor. But I wouldn't be too confident, because we have the daily pivot only like 80 pips away, 70 pips away. So what is the guarantee that price isn't going to scoop up some liquidity from the daily pivot? There is no guarantee. And I'm expecting some dirty moves. So I don't have any open positions yet, just waiting for the CPI data print. And based on that, not much to say. I already explained what to expect. If CPI is lower than expected, gold should move up. If CPI is higher than expected, or if there is no change, no significant change, then gold should continue lower. Any questions? All right. So while we wait, I just read some news. %70 of people on YouTube are expecting CPI or gold to increase, to go higher, which means that they are in favor of the economist forecast. Bankai Bender is asking, what is your personal view? Is it up or down? Buy or sell? In my opinion, in my opinion, the CPI isn't going to be as low as 5.1%, maybe 5.5. The core CPI, on the other hand, could be, you know, because the standard deviation is much lower on the core CPI, so the 0.1% decrease is quite reasonable. But on the leading CPI indicator, The 0.9, almost 1% 100 basis point decrease, 90 basis point is a bit of a wide stretch. Having a look on the previous one, when was the last time when the decrease was 0.9%? Back in December 2013. Sorry, the 13th of December 2022. That was the last time. So let's go back to 2022, December the 13th. Lucky for you guys, we have a fabulous, sexy chart where I mark all the CPI, the previous CPIs. Lower than expected. Okay, so the last time when we had 0.9% decrease in the CPI, the leading, not the core, you can see how gold reacted. So this 13th of December 2022, was gold going up or down from this price point? Was it going down?
Going up.
Was up.
Going up, absolutely. So of course the number was revised, but it was 0.9% decrease. So if inflation is decreasing, gold is gonna go up. So that's one thing that we can expect today. If the economists are in line with expectation, if the economists are correct, then we have good chances that price, is going to continue higher. Now, if I extend this beautiful trend line, somehow I still expect a dirty move on gold. You know what? Let's enter into a buy. What do you think? Should we enter buy or sell?
Buy, please.
Buy.
Should we trust the economists? Should we trust that inflation has peaked and decreased?
Trust nobody.
Very good.
I think better wait for results.
Yeah, well, that would be
Wait,
boring, wouldn't it?
Where will the stop loss be then? If you buy now.
If it's buy now, 1997.
Yeah, for a dirty spike down.
Yeah, that would be enough, wouldn't it? I mean, still 1-to-1 risk ratio, but it would be a bit, too wide of a stop loss, in my opinion. If you trade with small lots, then yes, absolutely.
Mas
Okay.
eu think that the strong payroll last Friday can be impacted today. with
Yes.
The inflation.
Yes. Yes. I mean, not particularly for inflation, but it's going to shape the market sentiment.
Can I ask something?
Of course.
Do you trade like in the mornings, like 3 or 4 o'clock Europe
Nah.
time?
Europe time? No. It's still the Asian session, and that's around the time when the Indian stock exchange opens. And I don't particularly like to trade that time. 5-6 a.m. Yes, that would be my time.
Okay.
So just before,
But-
a few hours before Asian close.
Okay, but only gold and US 30, right?
Anything where I see opportunity.
Oh, okay. So anything in the forex market?
Mm-hmm.
Okay. I thought most people trade around, 8 o'clock, 9 o'clock in the morning. something like that.
I hate to trade around London Open or Europe Open because there's always dirty moves. That is the
Okay.
one time when I lose most amount of the money.
Yeah.
In the morning.
So, your daily schedule is like you wake up 4 o'clock in the morning and you start trading at 5 o'clock. But this is just imagination, or
Yeah, 5, 6 a.m. Yeah, sometimes.
sometimes? Okay.
But you know, you have to find the time when you operate at your full potential. We are all different, and once you find that time, some people, you know, I hate to work in the afternoons, so I usually finish work. I used to finish work. I wanted to finish work always around after lunch. I don't like to work in the afternoon. I'm more active in the morning. I'm not an evening person, but others like to trade just before the New York Stock Exchange closes, during the power hour.
And but how many hours do you trade? I mean, 1 hour, 2 hours, depends on the market, right? How?
Yeah, it depends on the market, but I think there's a distinction between how many hours I trade and how many hours, for example, I analyze the charts. Trading is a matter of minutes or seconds.
Yeah, I mean, like, like taking the news, analyzing, and then
Yeah,
the whole thing, you know, the whole.
I think I spend more time on reading news and articles and getting a grasp of the current macroeconomics. When I look at the chart, maybe I spend, if ignore the streaming and the morning briefing, I spend like 20 minutes daily in front of charts.
Okay. Yeah. Sorry.
Why?
Thomas.
No, it was just a strange noise. Sorry. For the microphone.
Adam?
Yes.
Sorry for the interruption. You are from Switzerland, right?
Yeah, I live
The
in
home of Rushdie.
Habe ich das richtig in Erinnerung? Wir können es auch mal kurz schließen, wenn du möchtest.
Rushdie, ja. Was?
Wir können auch mal uns mal kurz schließen, wenn du möchtest, über Discord. Sorry for the German interruption.
Ja, du musst mir einfach eine Freundschaftsanfrage schicken. Ich weiß nicht, wie du heißt. Patrick W., oder?
Ja, genau.
Okay.
Mach ich, danke.
Kein Problem, gerne.
Sorry for the interruption.
That's fine.
Yeah, sorry.
I understood you changed phone numbers and Discord names and you're going to send messages to each other.
Yeah, I like girls.
Well, you know, I don't judge.
We
Don't judge
told
anyone.
about that we can talk each other.
You can talk German.
What is
I
German?
don't judge, but German.
Ah, German.
Gaat
Okay.
het? Oh, so tempting to jump into a buy. Okay, I'm going to enter with one standard lot.
Thomas,
Yes.
6 hours later, we have FOMC meeting. Will that be impacting the market?
What was the question? Sorry.
No, 6 hours later, we have FOMC meeting minutes.
Mm-hmm.
Will it impact the market?
Of course.
I mean, the current market, even though the CPI data.
Well, it's going to affect the market when it's released. Why I cannot change the time frame? Oh, I found it. Okay. So I entered into a buy position, but only one standard lot. So it's only a small lot. This way I can afford to have a bit of a, wider stop loss. So when we have high impact data and we don't know what is the outcome or what could be the potential outcome, and we only have a forecast by the economist, which you have to admit that many times the forecast is nowhere near to the reality which is printed, you have to be careful. Of course, when we have a number and if you can react, for example, the way I did the analysis allows me to almost immediately react whether it's a buy or sell, because when the data is printed, I have this, green and red rectangles, and also visualized and wrote down the potential scenarios. It's a very simple methodology, a very simple exercise, but it's very powerful, because this way you eliminate the hesitation, you eliminate the fear, you eliminate thinking, because you already did the legwork, the footwork, you already draw down the scenarios, you already analyzed the potential situations and outcomes. And this way, the only thing you have to look at, or I have to look at, is, okay, so what will be the CPI number? Of course, we have to monitor core CPI and leading CPI, which is two different numbers, but we discussed the difference between these two CPIs, and also you have the month-to-month and year-on-year. But those of you who are members of the Alpha community know exactly what's the difference, because I explained this to you in the morning briefing. And this way, I can just look at the chart, and when the data is printed, I maybe have to think 3 to 5 seconds. Yes, sometimes you miss the move in 3 to 5 seconds because the market already pumped, 50 pips, but it doesn't mean that, you're late. Yes, you're late 50, 60 pips, but you can still enter, because if everything is in line with the analysis, then you can still enter later, because I guarantee that the market could pump even 200, 300, sometimes 500 pips. Oh, yesterday's low, today's open is right here. So this would be a very nice foundation for a dirty move, just to tap into yesterday's low. What do you think? Is the CPI going to be in line with the forecast? Higher, lower than expected?
Habibi.
Thomas, I have a question.
Go ahead.
Why CPI have a perspective to lower today, and tomorrow PPI have a perspective to be higher?
So why is the consumer prices expected to be lower and PPI higher?
Yeah, because PPI is to producers, and producers always repays to the consumers the prices of all things. Is right?
What was the question? Sorry.
It's having some correlation with PPI and CPI, because PPI tomorrow have a perspective to be higher, and CPI today is to be lower.
So it means that the PPI, the producer price index, which meaning that how much the producers getting the raw materials, it's going to be expected to be higher. So it's inflationary, right? And what is the reason why it's expected to be higher? I have no idea, brother. I wish I could answer you this question. The only thing I know is how I would react. But if you look at the core PPI, it is actually lower than expected, lower than the previous. It's only the leading PPI which is expected to be higher.
Okay.
The core PPI, sorry, the month-to-month, actually, you're right, because that is expected to be 0.3% higher than the increase. It could be for many reasons. It could be because of the raw materials all around the world. It could be the shipping costs have increased. It could be, have you looked at the oil prices? is a big factor, transportation of the raw materials, because if transportation is more expensive, then raw materials will be more expensive as well. Okay, so quickly I'm just going to close down the cheeky one lot buy, and I'm going to wait until price comes a little bit lower, because it looks like it's going to edge out from this consolidation. So I'm going to wait, because it looks like that what I'm expecting is the dirty move. And let me just mark this on my chart. So that's my expectation. Which is going to be expectation or scenario C. That's my expectation. It could play out. I'm going to mark this as nice red color. Let me show the chart in the group. This is a good practice. When you have the urge to enter, because you know you have expectation, oh yeah, it could go up. You know, just have a small lot, and this way you know you can just close in a position anytime you want, and you not incur any big losses. But you satisfy your needs. That, oh yeah, I have expectation it's gonna go up. Imagine if I would enter with 5 or 10 lots, it would have been a big, you know, few $100. No, what was the yesterday's close? Oh, this one right there. Yes, yes, yes. So entry from 2003. That is my expectation.
Can I have a 3 minutes?
Oh, it's that time already. Damn. 3 minutes, and we're going to have CPI data print. 2 minutes, 45 seconds.
Got in time, Thomas. What's up?
Hey, Luis. Welcome back, brother.
Yeah, I got in time. I came so quickly, computer now.
So I explained that I have an expectation that prices are going to come down, just wick down to 2003, 2004, and then move higher. I entered with one standard lot, but then closed it down, you know, push it out. I still have the expectation it's going to go up. Kurwa. We're 1 minute 50 seconds, ladies. Who have any open position?
No, none.
No, all closed.
And I want everyone who's watching the YouTube stream to hit the like button, because we have 1 minute, and you know it would be a shame if I had to close down the stream because there's not many likes. So if you appreciate the work I do, hit the like button or the thumbs up button. And back to you guys. Do you have buy or sell positions open?
I still have myself.
None.
Since what price level?
2019.
My sales from 2018.
Why sells? Wow. Why mixed? 57 seconds, ladies and gentlemen. 57 seconds. Let me just change the music. We have 30 seconds, ladies and gentlemen, until the Consumer Price Index data print, 2023, 12th of April. My expectation with the price will to spike down to 2006 and move higher depending on the data print, and we have 13 seconds, ladies and gentlemen. 9, 8, 7, 6, 5, 4, 3, 2, 1, and the CPI should be out by now. Oh, what was the, I don't see the number. What was the number?
Still loading.
Still loading, damn it.
Wow.
What's the number?
5%.
5,
CPI.
6%, 5%. No. Come on, 5%. Go, go, go. It's a buy, it's a buy, it's a buy. Buy gold, buy gold.
Great,
Buy.
Thomas. Great.
Enter into buy. Not financial advice, just showing my trades, but you know, it's expected the price is going to move higher. So quickly, let's switch into MetaTrader. To 2006. Okay, a bit more room to wiggle. Sorry. Should have kept that freaking buy because now price pumped up. Okay, so core CPI month-to-month 0.4, decreasing in line with expectation. Leading CPI is 5%, which is a whole percentage point decrease from 6%. That is, ladies and gentlemen, it's heavily disinflationary, which in theory should push gold price up. Let's switch back to into 4 hour. Yeah, let's do the 4 hour. Oh yeah, there's still room to go to the upside, ladies and gentlemen. Loads of room to go to the upside. 2030 will be revisited soon. What do you think? Is it gonna go higher than 2030?
It could be.
Oh, Sammy's back, and he said, I told you it's an obvious buy. I do apologize, brother, I wasn't listening enough. Thank you so much for putting out from my misery. I should have listened to you. It's an obvious buy. Of course it's an obvious buy. Who's in a buy?
I am.
I am.
I am Thomas.
Me too.
Making money.
16.
Ladies and gentlemen, make sure that you lock in some profits, okay?
Yeah, I am buy from 2006.
Mm-hmm.
Maybe buy another position? Or...
I mean, yeah, have a look on the daily chart. It's pulled back enough from 2030. Yeah, I think it's going to make a new year-to-date high today, ladies and gentlemen. 2040 is my target. Let's put one of the stop losses to 2030. 2040, sorry. 43. Yeah, 2043. I think it's going to make a new year-to-date all-time high. What do you think?
It has
And
room
for me,
it.
2000. Tough choice. Tough choice. Do I walk away 2,000 British pounds? 2,500? Make the money, take the money?
MetaTrader is freezing.
Book a small profit and let the runners. Better. I did the same.
I have a small brothers and others right now, and I have booked 80% of my profit.
But then, what if it goes higher? I should trust my analysis.
Yeah. Always trust your analysis.
Correct.
What do I say always?
Always trust your analysis.
Trust your analysis. And now it's pumping higher, and it's 3,000 British pounds, ladies and gentlemen. And a small lot, one single lot, is already almost 700 pounds. It's a tough choice. Make the money, take the money.
Yeah, it's take some money, better than nothing.
Absolutely. Absolutely. I do agree with that. 4,000 pounds, ladies and gentlemen, on one single trade. I'm going to take some money off the table because, you know, my wife's going to kill me. So I'm going to take half of the profit when it goes up to 4,000. Come on, come on, come on. 4,000, 4,000, boom. And 2,000 pound booked. It's a beautiful trade.
Nice trade, Thomas.
Thank you so much. Who made some money today, ladies and gentlemen?
Still making it if it keeps climbing.
Yes.
It's still going up. Well, I told you it's 2040 my target, but you know, because we're trading our own money, it's important that we take partials, and you know, it's better to walk away with some money than no money.
Yes, 30 moved.
Oui, j'ai mis dans le...
That is a beautiful trade, ladies and gentlemen. It wasn't a perfect entry, but we still managed to make money. 120 pips on one single trade. That is crazy.
I think with your analysis, it was very easy trade and successful.
Thank you so much.
The first one, yeah, was perfect.
Yeah, I should have stayed.
Yes, babe.
And still going higher and higher, ladies and gentlemen. Dan just passed his 50k platform challenge with this trade. Oh wow.
Yeah. Everything is popping. So.
This is the alpha. This is the alpha power. Consistency is key, ladies and gentlemen. Who made some money today?
I made demo money.
That's, brother, it's fine. Because that money is going to be pennies next year or next month or next week. Then pennies make pounds, and pounds make hundreds, and you know, sky's the limit. And look at that, already again 2,000 British pounds, 3,000 British pounds, one single trade.
It seems that we see now the broke of the high in the euro. The break, sorry.
Oh no, I can pull that one. I'm going to close down the other trade as well, because it's money. I don't want to risk too much, but I want to have... So I'm going to close down another 150. Boom, another £1,000 booked. Now we have £1,400 running. Well, I think my job is done for today, ladies and gentlemen.
Yes, Thomas, my hairs are itching. I have some money. I don't want to give it to the market. So I'm finished today. Thank you, Thomas, for today.
You're very welcome, sir. I'm glad I could help.
And I think it's gonna keep rising until your target. See, to tomorrow.
2040.
Yeah,
It's
until
possible.
tomorrow.
Well, we have FOMC meeting minutes as well. Remember?
Yes, 7 o'clock. Yes, don't forget that. Could be another bump up.
Wow, Robbie Florin made $3,600. That is absolutely stunning. Well, ladies and gentlemen, if you made some money, make sure that you reinvest some of that money into your education. If you would like to see my daily analysis, if you want to attend the morning briefings where we almost live trade every single morning, share my view on macroeconomics, fundamentals and technicals, and in trading in general where I see opportunity, you guys the first to know because you're attending the morning briefing. What do you think about the morning briefings? Useful?
Yes.
Yes.
Of course.
What a way to start my day.
You can eat the wool, huh?
Eric is in a good mood. Oh, suddenly disappeared. Wanted to meet him.
He's on ganja.
Most likely, yeah. No, I wanted to mute him, but just... Oh, there you go. Got it. Got it. Financial Times. US inflation eased to lowest level in nearly 2 years in March. Boom. That is fucking disinflationary, and that's how we made money.
Wow.
Christian Powell says to hold the gold trade. Well, make the money, take the money. Already booked £3,000. I think it's a good day trade. Or day rate. Oh, sorry.
But Thomas, when watching your YouTube video, I can hear the music, and here in the Zoom meeting, there's no music.
Yeah.
Because I don't know how to put the music into Zoom.
Okay.
And you always choose great music, like in Solar soundtracks and stuff.
Mm-hmm.
Yeah, it's relaxing.
Yeah, it's relaxing.
It's like a war music right now. Maybe I can. Can you hear the music now?
Yes.
Yes.
Yep.
Yeah, I found a way to play music to you and to people on the stream.
That sounds like Battlefield.
Yeah, Band of
Because
Brothers.
we are in a battlefield, ladies and gentlemen. We go to war every single day to make some money, to make a living. We have to go into war.
Music, you have no idea. The end of your streams, I left my computer open with this music on. The end of the day of trading, yeah, I'm done. Fuck yeah.
I eat my cereals to this music.
Nice.
Come on, guys. 536 people watching the stream. You made money on my trade. You made money on my analysis. And there's only 200 likes. It's absolutely disgraceful. And let me just show you something. That my analysis, the visualization, the macroeconomics, that, if CPI is lower than expected, it was expected to go higher. So I already draw it before the move. And look, 100% TP hit.
Great.
Just show you something that... And it's still pumping, ladies and gentlemen. But not the number of likes on my YouTube stream. So if you appreciate the work I do, show me some respect, show me some love. Hit the thumbs up button.
I'll go on YouTube and like it, Thomas.
Thank you so much. Thank you. Okay, guys, my job is done for today. Did you look some profit?
Yeah.
Yes.
Good.
I did not. I just came and watched, and I came late. I don't know. I'm just here.
I made $1,400 US.
Yay! Well done, brother.
Demo. Thank you.
Okay.
But, I'm still in an open position.
The only easy day. Sorry, actually, we out of the. I was easy trade, but now it's retracing. And usually, most money lose money. Sorry, most of the people lose money when the price starts to retrace, because this is why we take always partials, because it's just horrible feeling when you have an impulse move, you made 200, 300, 400 pips, you make a lot of money, but suddenly price starts to reverse and move to the opposite direction, and you start to see that your profit, your floating profit, is eating away, and it's not a good feeling. That's why you always take partial profit. And when price pulls back or retraces, you have the opportunity to re-enter again. This is very important to emphasize.
Great teaching. That's great.
And everything will change this afternoon. Be careful.
Huh?
With your FOMC later.
Anything is possible, guys. In the market, anything is possible. In 1 minute, you're winning, boom, 200-300 pips. The next minute, you're out of the money. Okay. So those of you who don't know, we have the alpha community. You have the opportunity to join. 14th of April, I will close down the membership joining. There's still 8 places left. If you'd like to become a member of the alpha community, if you would like to get daily morning briefings, have a look at my trades, get learn about macroeconomics, and just pick my brain, see my trades, join the alpha community. And if you guys can say a good word or bad word or any opinion, honest feedback, feel free to say anything live on YouTube, those who are in the stream. And by the way, these people are not paid by me. These are the members of the alpha community. 113 people currently in the private Zoom.
We could see a rejection that's there. If you see now, or retest, and going up again. Oof.
You have 42 minutes until New York Stock Exchange open. Jimmy T on YouTube says, oh, prick. Is he gonna reach 2040? What do you think?
I think he will, but he could do a dirty move first.
As always.
As always.
Especially preparing for New York.
Whoa. It's moving again. some people entering into buy now, which personal opinion that I would be a bit of a pussy to enter into buy at the end of the move. I mean, who knows it's the end of the move, but it's just a bit too bullish to buy now, isn't it? If I switch to the daily chart, if I swing trade it, we're just massaging the year-to-date high, which is 2030. The all-time high is at 2070, which is a bit of a stretch. That's far away from now. But when you're massaging the year-to-date high, we can expect some pullback, and I wouldn't be too confident to enter, especially when we had 200 pip pump to the upside. But it's individual preference, guys. If you swing trade it with smaller lot sizes, then yeah. But don't go crazy, because if it pulls back, then ouch.
I think the price might drop before New York open, and then people might get out of the open.
Yeah.
It could be a possible, like the R3 resistant 2018, and that could be a possible entry if the prices come down.
There could be profit taking, there could be anything. We don't know what pending orders are on the exchange. Remember that the gold price is derived from many markets can alter the gold price. For example, the ETF markets, which is exchange traded funds that traded on the exchange, which hasn't opened yet. So that could bring some surprises as well, i.e. a major pullback.
Do you remember the intersection yesterday?
Oh yeah, of course I remember.
Exactly the same trend line until today, until exactly this trade on CPI. It did it again. A little fake out, it touched the trend line and up again. Exactly the same. I still the same here.
Yeah.
Wow.
Yeah, sometimes technicals work like magic, and it's just
Yeah.
crazy how some trend lines and support levels can work as magic.
How slow it was since yesterday to during this night and this morning. Last night on Asian market, it rose a little bit more and retest until the trend line. It was 1 day since that intersection, and again, same trade 1 day later. It's the way that I'm following. It's not just a touch and buy or sell. How much time I need to be patient on that trade, how much time I need to wait or see the next impulse or where is it gonna touch. It's rough a little bit.
It is, but trading isn't easy. Funny Moment says that CPI was just little lower than expected, so the effect won't be more than that. Well, brother, let me disappoint you. It was just a little lower than expected, but if you look at the overall, it's 1 single percentage point lower than the previous one. When was the last time it was 100 basis point lower than the previous one? Have a look in the historical price data prints.
Which one?
CPI. The leading CPI. So it's 5% versus 6% the previous one. This one right here. Yes, it's only 0.2% lower than the forecast, which I thought it's a bit of a stretch, but surprise, surprise, it managed to decrease 1 single whole percent from 6 to 5%. It is the lowest level in 2 years, guys. Of course, gold market pumped. But luckily, you had this beautiful analysis put forward to you by me. It was an easy trade, wasn't it? And if you're a member of the Alpha community, you would have get this analysis way beyond or before the pump. And ladies and gentlemen, you made money, I made money. I think there's no point watch the chart anymore, because the longer you watch the chart, the more pips how is this saying? If you watch every tick, you trade like a dick. So that's it for me today. I'm going to call it a day. Book in the profit, enjoy, and walk away. Tomorrow we're going to have PPI. Morning briefing at 8:30, the usual time. See you later, guys.
See you, Thomas. Appreciate it.
Good, Thomas.
You're welcome.
Thank you, mate. Cheers.
Bye-bye.
Thank you, Thomas.
Bye.
You're welcome. Finally. Wakey. Bye-bye.
Bye.
All right, ladies and gentlemen, if you would like to get the same kind of daily macroeconomic and fundamental analysis with technicals, of course, because technicals are important as well, but it's only a part of the picture. And if you don't know what's missing from your trading, you're struggling to make a full analysis and you feel like that you've been tricked on the market because market goes against you, that's because you don't understand macroeconomics. Once you understand macroeconomics, a whole new world is opening for you in trading. If you'd like to join the Alpha community, let me just see. 5 memberships on the Pro plan, 3 memberships on the Premium plan. Let's hit the refresh. Whoa, there's only 1 membership left for the Pro plan and only 2 membership left for the Premium. Once it runs out, once these are gone, I will close down the joining for the rest of April. So you better rush to get these 3 memberships. Thank you so much, guys. I do appreciate. Hit the number of likes so I can have 300 likes. TP hit. Thank you so much. Tomorrow is PPI. I'm not sure if I'm going to do a full live stream on YouTube because I want to give something only for the members, even though they get morning briefing every single day. But who knows? Thank you so much. This is the Alpha FX.